Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform.
Good morning, good afternoon, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'll be your host, co-host, Tom Schneider, CMT with NinjaTrader. Today is Thursday, December 7th, and really excited for today's show because we have a great topic fitting for the last show of the year. I want to welcome to the show Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. Hope everybody out there is doing extremely well. It's been a great year for Develop Your Edge. I'm excited to end on a very positive note. I want to tie in a bunch of things that we talked about throughout the year. And I want to focus on holiday markets because I've ruined Christmas before everybody. I'm sure some of you have as well. If you've been trading during the holiday seasons enough, you tend to have this feel of want to make money. You know, you're spending money, right? And so you feel like you want to make money. You have this impulse to come in and feel the need to do something. You know, whether it's colder outside, you're more time inside. And so you end up pushing buttons more, or at least you want to, and it ends up Really, most of the time for me, when I end up pushing more buttons, it's a negative thing. And so what I'm going to do today is I'm going to talk about how I approach holiday markets, how my mindset shifts a little bit, and how we really just tie in this whole year we've had here with Develop Your Edge.
Sounds great. And I completely agree. I was just thinking, yesterday, wow, all the things that are associated with the holidays can be very stressful, especially when you're trading. You might do things that you're not normally going to do. So, would love to hear what your tips and tricks are for dealing with that stress.
Yeah, so the first thing I think about when it comes to the holiday season is small and smart. And I put a note out every single morning. It's free in my Discord. And I say small and smart because of a couple of reasons. One is you have to look at the macro environment. You have to look at what the seasonal flows are, because that's also important. I actually did a whole podcast yesterday on Twitter with two of the best in the business about macro flows versus options flows, and understanding really where we are with the seasonality, understanding where we are within the year, right? And then those are different things, right? Seasonality is a little different as to where we are within the year. What I mean by that is, what has this year been? Has it been a bull market? Has it been a bear market, right? And this year we know, and there some may disagree that it was a bull market year because we didn't make new all-time highs, but nonetheless, the market was very positive this year. So you have this bullish sentiment, right? And so when you peel all that back, you don't have to be an expert. I actually put this out even this morning in my note that you don't have to be a macro expert or an options flows expert. You just can't be stubborn. And you have to look at everything on the bigger picture, and you have to understand context. Context matters. And I don't care what index you're trading or what market you're trading. When you get into the end of the year, things change a little bit. You have just different underlying things happening. You have bigger players that have to do something with options expirations coming up. Jem Carson, some of you may know him. Like I said, he was in my on my podcast yesterday, talks about how the most important options expirations for the entire year are in December and January. And so you have that, right? You've got a year where the Fed has done a ton of stuff with rates. You've got interest rates. We've kind of in this doldrum period now where the Fed isn't doing anything, but yet interest rates are moving quite a lot. And we'll actually go to the charts and look to see what 10 years doing. And so how that impacts things, how that shifts, right? And so you have these push in and pull type scenarios that are going on. And you have to really be able to sit back and realize that there's going to be a lot more randomness in the market. You're going to have a day where it appears we may break out and we come right back in, a day that we're getting ready to head lower and break out and we come right back in, right? And you have also divergence within the tape. You have Russell and Dow really just screaming higher, and you have NASDAQ kind of softening a little bit, rolling over just a little bit, S&P kind of caught in the middle. And so you have all these different things that as a trader, you may say as a short-term trader, well, Anthony, I don't really need to know all of that. I'm just sitting there. I'm trying to make $2 in the S&P, or I'm trying to make a little scalp, or I'm just looking for a little day trade. And I'm going to tell you that is really the wrong attitude to have. And I'm going to really explain why. I'm somebody I started off as a really, really short-term scalper. I mean, when I say scalper, I've talked about this on this show. I was trying to make ticks, right? And all the ranges were a lot smaller. It's a little different now. Ticks are really handles in the S&P as fast as it moves. But when I really became an efficient scalper, when I really started to get really, really good and where I could size up, I understood context. Where are we? Where are we within the scheme of the year, right? Like, where are we, with all these different push and pull narratives I talk about? And you will find times where everything is really leaning towards bullishness, and you will find times where everything leads towards bearishness. And you will find these moments to where as a short-term trader, you really do have more edge, because when your short-term strategy that you think obviously matters a lot, and you should think that, but it matters a lot in the context of the situations. So in the context of a situation now where you have a push and pull, your little short-term strategy doesn't really mean that much. And I mean that in the sense of, you're not going to get the results you would get in a scenario where everything was lining up together. Indexes all working together, macros working with options flows, seasonality, all these different things where we are within the year, all the things I've mentioned. When you have push and pull, you have a lot of mean reversion type moves. So you have moves in markets, intraday moves. Just look at yesterday in the S&P, rally up, come right back down, right? Break yesterday, come in, rally today. I mean, you have a lot of reverting back, and it's because different traders, different people at different times have to do something. So on a rally, you might have somebody who's got to sell a bunch of stuff, and they come in and they just start hitting the bid. And on a break, you have a bunch of guys out there that have to buy a bunch of stuff. So they come in and they start, lifting a bunch of offers. And so you have these flows. So your short term can really be skewed, because unless you catch it in that moment, you're not really going to really build up on your day, your week, or your month, right? And so that's why I've found these times of the year, unless things are really all set up, and I've had some unbelievable Decembers, but it's always based upon where we are in the cycles of everything that I talked about. And so I want to pull up the charts, and I want to go over some things that I think are extremely important. And it doesn't matter what strategy you use. The things I'm going to discuss are really, in my opinion, all you need to really look at to understand context. And I've said before, you've got the gems and the Andy Constants out there that are just masters at understanding macro flows and options flows. You don't need to be that. Right. I mean, we listen to people like that, or, other experts out there that really hone in on those specific things, and they're painting a picture as well. And they're smart enough to know as well that this is not a time to be really aggressive with much of anything, because we do have this push and pull type scenarios. But as a day trader, whether you're really new or you've been doing this for a little bit of time, you could do some simple things to understand market environments. First thing I want you to think about when you look at the chart, I'm going back to May here. I can pull the whole year up, but I'm not going to squeeze the chart. For the most part, we're starting with the NASDAQ. Why? Because the NASDAQ is the upside leader of the market. And when you look at the context of the year, the NASDAQ has been the upside leader. It is the market that has taken us higher. It has led. Everybody talks about the Magnificent Seven, or whatever the nicknames they're giving it, right? We went from FANG to Magnificent Seven to whatever it is, right? The bottom line is tech has led the rally this year. And so when you look at it from that perspective, you have to see what the leader's doing. It's up double-digit percentages. Where are we coming into a seasonably bullish period, right? And though some may argue that there's a macro backdrop that's pushing against this a little bit, so you understand that there's that as well, right? So in your mind, you don't have to know necessarily the whys, but you can understand where we are contextually. And then when you look at the chart, you say, look, here we are. And we take my simple philosophy. When you look at Bollinger Bands, anytime a market is going up or down, I've talked about this many times, and the Bollinger Bands are opening up like a mouth. And that just means that the bottom Bollinger Band's going straight down and the top is going straight up. Markets are expanding. But once they start to come back in, as you can see, I drew an arrow here and I box this out with this fib retracement tool. Markets tend to be mean reversion type markets. So a big part of this rally occurred really early for the Santa Claus rally. Santa Claus rally really is after the holidays for the most part. It starts beginning around Christmas and goes into the new year essentially, right? And so a big part of this rally that we've had so far has stemmed at the beginning of November, end of October. And now we're getting into a seasonally bullish time where the market is kind of stalling in the NASDAQ. So you recognize that initially NASDAQ has had a really big run, and you look at it and say, when you look at my fibs, I break this out before I talk about how I draw a fib to the top peak to the bottom peak. And my 30% line is really what I consider a pivotal area to continue trend higher or to mean revert back. We've been spending some time below it. So when I look at this, and I said contextually, where are we with the NASDAQ? Really big month and a half, slowing down now. Tech is somewhat stalled, even though you could still say we're not too far from the highs, but ultimately not really leading and pushing higher at the current moment. Bollinger Bands are pointing in, expect two-way tape, potentially some weakness as we also sit below this moving average here, which is a 5-day moving average. We go to the E-mini S&P. When we look at the E-mini S&P, now the E-mini S&P hasn't had the year that the NASDAQ has had. It is really the man in the middle. And it's the man in the middle because you've got so many other factors in there. You got energy, which has gotten weak as of late. You've just got a lot of push and pull already within the S&P. And as we know, because the NASDAQ has been the leader of the year, technology, the way it's weighted in S&P, it's always going to lean more towards the NASDAQ. So the NASDAQ is a great leading indicator for the S&P. Now, the S&P right now is sitting a little bit firmer than the NASDAQ. So right away, we look at this and say, okay, how do we know it's firmer? It's sitting at or above its 5-day moving average, which I think is a great moving average, 5 or 10-day. I've been moving to the 5-day lately just because I think I want to see just that 5 days back. And it's sitting above my 30% line. And you can see the Bollinger Band is not coming in as fierce. It's really kind of flat. So when I compare apples to apples, same indicators, I look at it and say S&P is still just kind of grinding higher and sitting at or above support. And this market is trying to push higher amidst the NASDAQ really softening a bit, right? And so that gives us that perspective that the S&P is trying to actually push through the NASDAQ weakness. Then we go to the Russell. And this is where we're seeing a lot of divergence, where the Russell is continuing to push higher. And you can see the top Bollinger Band is pushing up. I've got that arrow there. We've got a really steep trend line going back from October that it's nowhere near come back to yet. Not nowhere near, but it's not near it at its current moment. And Bollinger Bands are expanding outward. And Russell is now playing catch up to NASDAQ. And even S&P. And so you have a divergent tape. You have days where the Russell was up, I think, almost as much as 2% and maybe more, and the NASDAQ was even down. And ultimately what's happening is you have a spread going on. And with that spread, you understand that what I see, it doesn't matter the why and whether it's right or wrong, but what we see is you see a lot of late buying in the Russell, whether that's catching up to what the NASDAQ is or this is short covering, nonetheless, it's buying. So you can call it what you want. And it's coming into small caps and it's coming out of technology. Right. And so there's a rotation going on. And when you see that, that is going to cause divergence within the S&P because now the S&P is going, whoa, I've got the strength in Russell now. They've been weak all year. All of a sudden, you start to see these other companies that maybe in the S&P 500 that maybe weren't performing start to perform, even though tech is getting soft. And that's why you see the S&P be very sideways because you got a softening NASDAQ and a strengthening Russell. Now, Russell stocks aren't in the S&P, but it's a spillover effect. So you understand the context of the situation. I've always said until I started looking at other indexes, when I was trading the S&P, I never really became a very good index trader because I didn't understand the underlying themes. That's what we're talking about here. Push and pull. If all of a sudden NASDAQ were to start rallying, boy, would that give a leap and a push to the S&P. You go from push and pull to push and push, right? And then we go to the Dow. And when we go to the Dow, look at the Dow. Look at this rally, right? Even though we might be a little overbought on the RSI, look at this Dow move. And we went from 32.5 to 36.5, basically, 4,000 points in the Dow in just 6 weeks. Right. And so when you look at that, Dow stocks are in the S&P. And so now you have this scenario where I go back to you've got push and Russell, you've got pull in NASDAQ. NASDAQ is kind of rotating, a little bit lower. You got some NVIDIA softness and some other things happening within tech. But the other side of the coin, these markets are exploding. So contextually, you're building this theme and understanding of what's happening within the market because you have two indexes now that were really the weaker index is now outperforming. And you've got the NASDAQ that is not performing as well. And then you got the S&P caught in the middle. And it's why you see the S&P doing what it's doing. Oh, today we're lower. I'm going to get bearish. Oh, no, we're higher. I'm going to get bullish. And ultimately, it's the road to nowhere. Kind of hat tip to Ozzy Osbourne, who's actually just had a 75th birthday. He's one of my favorite rock stars. And, that song, Road to Nowhere, whatever, it was something I wanted to kind of plug in there. But ultimately, that's what happens in the S&P. It's that Ozzy Osbourne song. And so where you start to understand as a trader, small and smart. I write in my notes every single day. I write notes down on a paper before I go and write my note in my Discord. And I say, where are we in the market? If there's anything I look at and I underline and I just keep hitting it as small and smart, Anthony, because you might be right in the short term of what you're looking at, but what's happening in the Dow? What's happening in the NASDAQ? What's happening in the Russell? Look beyond your index. And we've done a lot of homework on this in the year. Last thing before I bring Tom in, and I know I'm going long-winded today, but Tom's under the weather and I'm helping a guy out today. So what the next thing we're looking at is the 10-year. Look at what we've done since the end of October. And if you really go back and listen to that podcast, and I keep kind of plugging it because it's really, they're two of the smartest guys I know. They talk about the QRA announcement back then. I'm not going to get into that here. But once again, themes, what's happening, build a picture, get better as a trader. We've had this move in tens. And you heard Jem even talk about inflows into bonds might be strong into the end of the year. So you have a market like the 10-year, which is running higher, which is probably a lot of this short squeeze. Doesn't matter the why, but it is. And the rates are acting like they're going down in a big hurry, even though you might look at Fed funds and say they're only looking at a quarter basis point, slightly favored in March of 25, which is not long from now, hard to believe. But it's, I don't know that necessarily rates are running much lower anytime soon, but tens coming back the way that they are, that's going to give a little bit of lift to the market because they think that rates are going lower. Right. And it doesn't matter what you think, if that's bullish or not. Look at the tape. They look very similar. So now you've got a 10-year to throw into the picture and you say, okay, what's going on? And we start building these themes and we look at it. And I say throughout the whole year, I've talked about in Develop Your Edge that it's not just about coming in every day, looking at your strategy and finding that trade that you're looking for in your short-term chart. To really develop your edge, to really last longer as a trader, to really build your career as a trader, to really make money beyond just paying the bills as somebody who's out there just following a strategy, to become a trader, you need to understand some of these things. Because this is what takes you to the next level. Because context matters. Where are we within the scheme of things? This is what puts you in better positioning when you're trading intraday. If everything starts to work out and it looks very similar in the indexes and you understand kind of what's happening in the bond market, doesn't matter the why, but you see that it's moving and you have some edge there, you can better position yourself either in larger positions, more aggressive positions, or even better, you keep yourself out of some bad positions because you're like, why do I want to step in buying this thing, even though Russell and Dow are making highs and NASDAQ's new lows? Let me see what the market does here in S&P if you're an S&P trader, and maybe I get a little better price, or maybe I miss it, or maybe I step in really small here and I let the tape do its thing, and then I catch a rotation, and I keep myself out of harm's way, and I don't ruin Christmas. So, Tom, we bring you back in. I know I threw a lot at everybody, but I felt it was important to do that.
Well, thank you, Anthony, and thanks for being considerate of our situation. But a couple questions come to mind. You mentioned Santa Claus rally. We're going into the end of the year. You also mentioned interest rate environment. You mentioned kind of performance of the tech industry versus blue chips versus small caps. All of these things kind of are either reinforcing, they could be competing, they could be at odds. What's your experience that if, let's say, the Santa rally is on, what do you think about the divergence in the stock index futures now versus during the rally? Like, I'm thinking a low tide or high tide lifts all boats, right? So is the Russell going to still be playing catch up to the NASDAQ, or, is it kind of doesn't even matter? Santa Claus rally applies to all the stock index futures, and it's a matter of what your favorite stock index future is that'll you'll benefit from. Can you kind of like put it in context there?
The way I would look at the Santa Claus rally is there's one thing that's going to happen before we get to that moment, and that's going to be rollover. And that's something else I didn't mention. That's also an important time right now. You already got 10-year moved into March of 24. You've got S&P moving into March of 24, going in Monday, right? And it comes off the book soon. So you have rollover as well. Then you get really a fresh, clean slate in the futures markets, which makes them unique in this situation, to where now everything is really focused on January, right? You've got options expirations coming up. And so the way I look at it when I look at the Santa Claus rally is, if the indexes start to work together and we do see a Santa Claus rally and we start to see flows coming in and everybody is going up together, I'm only going to trade the strongest one. Now, I really don't trade the Dow much, but I would most likely be in, whether it was Russell, S&P, or NASDAQ, the one that's outperforming. I would choose the one that's the strongest. And so I know some of you may or may not be multiple index traders and you're new, and you probably shouldn't be at this point. But as you grow as a trader, I think that I always will lean on the market I want to be long is the one that has the strongest chart and the one that's leading the rally. I don't want to be long the one that's the lagger. Like trying to buy NASDAQ right now, if you were in the Santa Claus rally mode, which we're not, but if we were, and they're the weakest, no, I'm buying Russell.
Right.
Or I'm buying S&P. Or, I mean, because of that reason.
And, one other thing that comes into play at this time of the year is fund rebalancing, right? So,
Yeah.
You've got all these funds that have to have a certain percentage of their fund in these type of stocks, or particularly some of them are very specific stocks. What people don't know or may not know is they don't have to be in those positions the entire quarter, right? So they might try to, get a little bit of alpha by dipping their hand in a stock that's not part of the mandate. But at the end of the quarter, they do have to have a certain percentage of certain stocks. And you might see a little bit of a bump in these stock indices if that happens, right? Because the stocks are all of a sudden bought back into the funds, and that might propel it. I don't know if that has anything to do with the cause for the Santa Claus rally, but it just seems like there are so many factors coming at the end of the year into the new year, right? Because that rebalancing that happens before December 31st also happens after December 31st when people rotate out, right? So,
yeah, I mean, no, you're 100% right. I mean, I look at it like this. It's one of those things is that I try not to crowd my mind with too much. What I try to, because I know that there's all these different things going on right now. And the way I have always really had success as a trader is understanding the basics of what's happening, not trying to be an expert in macro flows, not trying to be an expert in options flows. I'm always going to be focused on what I do, and that's a outright futures trader, and I do trade options as well. But majority of what we're talking about here is just being an outright trader. You understand that there's these tides and these things behind us, but what happens is when I get to the screen, I just find myself in a relaxed state of mind and mode where I say small and smart, understand these different currents. I don't need to know everything. I try not to complicate it and think too much when I get there. It's similar to my golf swing. On the range, I work on certain different things. When I get on the golf course, anybody that's played with me will say, Anthony just gets up there, gets set, and hits the ball. And it's because I've built in that routine, right? I know what I've prepared for, and now I know I'm going to be small and smart. If all of a sudden something in the action where I see everything is working together, then I start to adjust my position sizing. If I see more divergence, if I see things happening within the tape, I said this from the beginning, you don't have to be an expert. You just don't have to be super stubborn. And I think that's ultimately it. I mean, there are so many factors that we can say that are happening at this time of the year. But once again, when you're trading holiday markets, man, just come in and slow it down and know that it's just because it's the end of the year. It's not a race to the end of the year. It's funny. A guy said something to me the other day, or I saw this online. I can't remember exactly where it was, but it's stuck with me. You'd think I would remember exactly where it was, but somebody said it was like up to the age of 40, it's a race to get there. After the age of 40, it's a countdown, right? And I thought that was great. And I thought to myself, it's funny. I've never been more patient in my life when I have, we all have less time as each day goes by. But, most people, when they get in this business, they're in such a hurry, or they're in a hurry right now to make money, and maybe because they need to. And I get it. I understand it. I've been there. My first anxiety attack was on Christmas morning when I woke up and I couldn't give gifts to everybody because I was busted. And so I understand that. But you put yourself only in harm's way by trying to force things through. Slow things down during this time of year. When there's crosswinds, it's like I keep looking at my paper, because if you don't write it down, your mind isn't transferring to it. So when you get to the keyboard, you get to the screens, you do it. And so I know that that's a long way to ask that question, but I guess I go back to there's so many things to think about right now. You don't have to know it all. You just have to understand context.
Awesome. Thanks for that. Anthony, I know we're running up against time. You do. I saw what you were putting up on the screen earlier. Would love to see what you have to talk about.
So two things I want to go over. It's the last Develop Your Edge show for the year. I want to show this is my Discord. It's free. It's where my morning note is. Going to have a whole dedicated page to this area for Develop Your Edge coming into next year. I'd love to see more and more people in there. If you guys are in Discord, you can come and find it. It's Place Your Trades. There's links on my Twitter. Make sure it's the right one. Make sure I'm the right person in there that talks to you. I don't send you DMs or messages and all the fakes out there, but I put my morning note out there and I try to keep it light and, talk about what I'm seeing in the markets. It's free. We've got a great community in there. So I wanted to mention that. I also wanted to mention CME Group's last challenge of the year. I'm really excited about this one. It's the first time that CME Group is adding options into a challenge. And it's I think, a great way to understand how options even work. And it's the crypto currency challenge where you're going to have Ether and Bitcoin options. I'm participating in it. It actually begins this weekend, Sunday night. There's real prizes. We talked about these in the past, and they're actually giving away $2,500 to the first place winner of this crypto classic. And second place is $1,500, third place is $850. So go and sign up for this. I think it's an absolutely great thing that CME does. Go out there. This will help you slow down a little bit. If you don't have any trades next week, it's rollover. You got things going on. Go trade some Bitcoin and Ether futures, see if maybe they make sense to you. Also, the options, they're giving away cash prizes. Who knows? Test your strategies out.
I love it. I love it. That starts Sunday night.
Sunday night.
That's coming up, right?
Yep.
I spend, I think, at least once a day reporting Crudele clones on Twitter. So I know you've made it on Twitter when it's at least once a day, maybe twice. Keeps me busy. But Anthony, I want to thank you so much for this show this year. It's been great working with you, and we'll do this again into the next year. But again, thanks so much for providing all this information. If you look back, 36 shows, 18 hours of Anthony Crudele talking about how he trades. Amazing. Really appreciate it.
I can't thank you so much, Tom. I have to, hat tip to the great team at the Ninja Trader Network and just at Ninja in general, even to the Tradeovate side. They're all connected. One of the best teams I've ever worked with in this industry, and all of you that have tuned in throughout the entire year. I love Develop Your Edge. I really do. It's my 30 minutes a week live with all of you to come in and talk about futures markets. I know we've got some really great stuff for next year, but until then, stay patient. I'm glad that we ended on this positive note with the holiday season. Keep this mindset throughout the rest of the holiday season, small and smart. I think about it every single day. It helps me slow things down. And I want to wish you and your families just a joyous holiday season. Happy Hanukkah, Merry Christmas, and I wish you all a very happy and prosperous 2024, Tom. Here we go, man. It's crazy.
This year is like a science fiction year, right? When you were growing up, 2024, flying cars, the whole bit. We're not there yet, but same to you for your family. You and your family, happy Merry Christmas, Happy New Year, the whole bit, and thanks to the viewers as well for coming back every week. Really appreciate what you do for us. So with that, I'm gonna end it. I'm gonna say, come on back at end of the day. Mike Burke will close out the day with bars closing. In the meantime, have a great trading day. We'll see you later.